Good morning, everybody, and welcome. It's TheoTrade Chat. It's Don Kaufman here, bright and early, of course, on this Monday morning. It's October 27th, 2025. Your S&Ps are up almost 60 handles. Oh, we haven't heard this one before. Let me think. Oh, it's China. Let's do a deal with China. Let's do it again and then again. And I think that this is the fourth or fifth time. I lost count. Seriously, does anybody have count of how many times that we've actually done a deal with China just from April, because that was the ultimate deal, the stay of execution from April to right now? How many times have we traded higher on the exact same news? You tell me, because I've lost count. But the whole process, though, it definitely amuses me. First thing I want to point out this morning is it's quite the bit higher. The volume is okay. It's still kind of light though for, if you would, a fierce move to the upside. And it is a fierce move to the upside. You're opening up almost 1%. Obviously, the NASDAQ is on fire. Looking around like some of the other products on the screen, the bond market, the volume's 135,000. And in a morning like this, I don't mind saying, I'm looking more at like a volume because I want to see participation. Is there a crap load of participation in the overnight trade? Or are we just up here kind of floating, waiting to see what's going to happen with equities? We're kind of somewhere in between. And I mean that because it doesn't mean we're going to pull back or anything like that. But you look at like gold, okay, that is huge contract size. Like anybody that trades gold traded it overnight because you did 163,000 freaking contracts. But in the S&Ps, it's light and fluffy for the kind of price action that we're seeing right now. So quite frankly, when you come in this morning, okay, you should clear your head of some of the expectations of the marketplace. 35 seconds to go to the cash open. Most of your major tech stocks are bid. Okay, because China's open for business, although you're not allowed to do business with them in Nvidia, but they're still open for business. Anyway, through and through, what do you got? You got tech. The financials have a bid. That bid is even going to be felt somewhat inside of the energy sector. So as you come into a cash open here, the advanced decline line is going to be really nice and strong. The ticks are going to be screaming. There's no volume yet to substantiate a damn thing that you're seeing on the screen. Let's come to the bell. All right, as I was saying, the advanced decline line strong, not screaming strong. The ticks should be screaming strong, though. The ticks out of the gate should be shockingly large, probably positive 1,000. There it is, positive 1,000 ticks. It's like I've seen this movie before. The S&Ps are right at almost their highs of the session. So the interesting thing though is the advanced decline line is not in a correlated state, There's still a few odd sectors out, which is kind of crazy because no matter what, we're still playing the rotation game. Apparently, Walmart doesn't get to play in any reindeer games. It's like, Halloween is here, so it's really Christmas. That's, just getting ready. I've been to the stores. I've seen what's out there. Take a look at the wild movement inside of the NASDAQ in the first couple of seconds of trade. But mind you, NASDAQ is ripping out of the gate. The S&Ps, okay, following behind, but to a much lesser degree right now. Again, we'll talk about expected moves in just a moment. I put out the expected move, but here, this is important. Today's expected move is only $47. We're there. You're at $62 right now inside of the SPX. So we're all lit up to the upside over here. Things are getting crazy. Looking down my list of the usual suspects, there's only a handful of companies. Some of the drug stocks are down. Apparently Ford can't get out of their own way. By the way, there's no good news in the car industry right now. None. Other than, companies are going bankrupt. Materials sector is down. Healthcare is down. XLU. Well, ironically, I've got that position on right now. So just a little further, just a little further, the XLU is working out quite nicely at this point. Again, I'm also a little baffled here in the first 2 minutes of trade. And I'm a little baffled by the fact that the S&Ps are stagnating right now, and the Nasdaq is as well. So as I said to you, the order flow in the options marketplace, okay, is what is dictating, okay, everything. In fact, there's this SPY trade that I've been trying to get out of. I'm going to try right now again. Okay, Todd, are you awake yet, Todd? It's like it's late in Chicago already. It's already like 8:30 there. Todd's awake. I'm going to start whacking out of trades. I'm up like 54, 55%. And I'm going to explain. I'm actually going to use the trade that I'm exiting to explain a lot of what I saw last week. And I still see it today. We have an interesting situation right now of a marketplace that on Friday, okay, was rallying. Obviously, today is Monday, it's rallying. And some of the out of the money puts, the more we go up, those out of the money puts should kind of get crushed because if you look at volatility, okay, volatility is down. These puts, okay, are not getting crushed. Uh, all right, so sure. Uh, it's Xmas time. Okay, sorry, I'm just making sure. Just making sure Todd is all ready. So the trade that I'm trying to close, okay, is 81 days out. And I talked about this in the weekend update. I talked about it in the trade updates that I do, but I don't think I did a very good job of it because it is really freaking important to kind of understand this. Market is going higher 81 days out. Okay, these puts are not really crushing in value. And that is an oddity. It's something that yeah, I've seen it before. I've seen it a ton of times before. I've seen markets rally back from all kinds of things. But what's odd about this is, come on, man, give me my order history. What's odd about this one? We have 40 days. Give me 40 days. Give me 40. Um, my trade history is not coming up. I need it. What's odd about this one is that, first of all, Thinkorswim sucks and will not give me my trade history, which I kind of need right now. I'm in the right account. And no, I see you. I'm in the right account. There it is. Okay, there it is. So open to close, to open to close. We're going to look at that. This trade is for out of the money puts. Okay, one of them I own. Okay, it's one of them I own, and three of them I've actually sold. So it's four different strikes of out of the money puts, and they're not okay progressing positively in price. There is something deeply off about that picture. By the way, I put this thing on for like 15 and change. I'm going to try to whack the trade right now. Okay. He shoots, he scores. Duplicate order, copy. Okay, we're selling Christmas trees. We're selling Christmas trees. So this is nice profitability. I opened it for $1,500. I just closed it for 700. So you're up about 800. And the fact of the matter is the trade was on exactly a month. And again, in the face of what I'm seeing inside of the marketplace, get this crap out. I'm just going to let you guys know. Like, I don't care that we're up today, right? I don't care that we're up today. If you got it, you got to close it. Like, if you're up like this right now, close your crap. Close your crap. I'm going to see if I can do a little bit better in here. I'm working the trade in a number of places to actually close. And work $7 in here. Oh man, I filled at 721 on the other account. There we go. We have a fill. So apologize. It's going to be a little quiet with me closing some fairly complicated trades right now. And the last one I'm going to close is inside my IRA. Here's the trade in the IRA. Let's create opposite order. Close at 78.25. Nothing. That was cool. Bear with me. I'm going to go look at my close over here and give this to make sure that everybody can see this. All right, we have closing orders. Okay, along with, bear with me here one more second, and I promise we'll be out of this and off to the races. Okay, so we're closing Christmas tree spreads right now for just over a 50%, again, just over a 50% gain. And that 50% gain is based on the original opening price. If I go something for $15, you close it basically for $7, 7 and change. You're literally at like a 50% gain on that one. And what is at issue here, and it is an issue, while I'm closing this trade, okay, I'm recognizing the trade is not expanding as much as I would like it to. It doesn't mean that it's a bad trade. It's not about the trade. It's about the fact that I have this position on, and the position, okay, the position is not maturing like you would expect. The only way you would even know that, okay, in the marketplace is if you actually had positions on. What's weird about this is you can look at skew all you want. Skew is all the way to like 153. For those of you that understand skew, out of the money puts are all kinds of jacked up in terms of premium. But the back month, and the back month is what I am trading. Back month means this was 81 days out. Okay, well, you know what? I happen to have another Christmas tree on here that's 116 days out. Okay, and that one's maturing, but again, they're not maturing nearly, okay, as quickly as one would anticipate. Okay, so in effect, by the way, this one's only been on for okay, a few days. I caught the bottom over here of 1022 in 5 days, and I'm already up like 37%. One's a huge winner. I think I put that one on while I was doing the Christmas tree, webcast the other day. By the way, anybody that has that other Christmas tree on, okay, you should probably close that one too, because you're not going to get afforded that opportunity ever in this. It's crazy. Like this February one, look at this. I opened it for $17. Check this out. I'm going to create it. This is one I did not send out. Okay, I did not send this one out, but bear with me. This should close right in this neighborhood here. And I'm going to get out of that one too. Why did I just get out of that one? Okay, because get out while the getting's good. They're not going to let you out of this if this marketplace starts to sell off even the slightest bit. So I wouldn't take the chance. So I'm closing some inventory out. Okay to go. All right. That was a nice amount of profitability. Made almost 40% on a Christmas tree in like 5 days, which is crazy. So let me give you the summation of this. Okay. There's trade buying puts right now. That's all I know. Right. I mentioned it on the weekend update. I'm going to mention it again today. There's trade buying puts. That crap is definitive. So I am not, okay. Somebody was just asking me, why not do a VX spread? Stop. Okay. Don't want to do it yet. There are some uncomfortable things I'm seeing on the screen right now. Okay. It doesn't, and again, everybody's like, oh, he's bearish. It doesn't mean that I'm bearish. Okay. The bottom line is a very simple one. You sell out of the money puts and the out of the money puts are not working. There's something wrong. Okay. Because you're selling out of the money puts and the market's rallying. Look at the rally. Okay. In the last couple of days. Look at the rally in the last couple of days. We popped to the upside. My trade made money. I don't want to dispute that of course it made money. I just closed it for like 52, 53%. Okay. The trade made money, but it should have made a hell of a lot more money, a hell of a lot faster than that. Okay. But this continual buying of these out of the money puts is some really scary business. And it's continued. Okay. Even into today. You don't necessarily see it reflected in volatility. You don't necessarily see it in skew because volatility, the volatility that we're looking at, like volatility futures are 23 days out, VIX is 30 days out. When you look at skew, this is the 30-day skew out here. Okay, you're further out in time, and there's put buyers still. Why? I don't know. Maybe hedging activity. Okay, nobody knows anything, and that's important. Okay, to state, no one knows anything, especially at a time like right now. But on Friday, obviously there were still some put buyers out there, and it seems to be there again today. It's a marketplace that's definitively higher, okay, but rather unstable. By the way, the advanced decline lines come off a little bit. I don't think that the advanced decline line coming off, okay, is necessarily a sign of anything because if Meta's strong, if Tesla's strong, if Nvidia is strong, it doesn't matter. The advanced decline line could be 90 stocks to the downside, but if you have like 5 or 6 that are strong, okay, bottom line, okay, if you have 5 or 6 stocks that are strong, but they're, $1 trillion plus market caps, nothing else really matters. So there was another question here. It said, how do you know there are put buyers? Okay, because I'm the one, I'm trying to get out of my puts, okay, that I have on, and they're not maturing. Okay. So you're like, well, how do you know those are buyers? Because when you sell something as far out of the money as I'm selling it, and the market moves up 100 points, those puts should get crushed in value. They're not getting crushed in value. Bottom line, doesn't take a lot of volume, okay? But there's definitely put buyers way out, and they're out like 81 days, 116 days. And it doesn't necessarily entail that there's any big size out there, okay? But you're just not seeing the marketplace, okay? There's like no one trusts it, okay, as far as you can throw it. That's, I guess, in summation in here. And look, the VVIX is still somewhat elevated for the fact that the marketplace is literally at all-time highs. The VIX, okay, has come back down. But the VIX is an instrument that's really, really like kind of shorter duration. There's a reason that I like to look at the VVIX more. The VVIX is volatility of VIX. If you're going to place positions in the VIX itself, meaning if you're going to place positions in VIX options, okay, big traders really only want to trade like these 22-day options in here. They'll trade back here in 50 days, okay, but not nearly as much as the Novembers because VIX options that are more than about 30 days out just don't make a lot of sense. They're not good hedges. So hedging in VIX, okay, can be seen by looking at VVIX, but hedging in the S&Ps doesn't always get reflected in VIX itself. And that's really a convoluted mess because in the S&Ps, meaning in the SPX, you can hedge 100 days out. Nobody knows what's going on. Nobody's going to see you. Nobody's going to worry about it. But if you actually use VIX options, you kind of got to use these 22-day options to hedge. You go, why? Because VIX options are incredibly sensitive to time. And you need a shorter amount of time to even make the VIX options work as decent hedges. Anyway, it's good stuff. Good stuff over here. But the marketplace today kind of has to make up its mind a little bit. Either we're going to go with the idea of like a rally and this thing is going to be straight up. You can see in the first few minutes of trade, okay, just an absolute slop fest here in the first 15 minutes. I mean, it's a slop fest to the upside. S&P contract size is absolutely anemic this morning. There isn't any, right? That is weird. There's literally no contract size to the S&Ps. You have a marketplace that you're like, oh, it's up there. It's fever pitch. It's anything but. Okay, it's up there or floating with absolutely no contract size. Look at this. We're not even substantiating an average of about maybe 3,000 contracts a minute, okay, in trade. That's basically everybody sitting back like this, okay, arms folded, waiting for somebody else to do something. Okay, I'm not saying the contract size can't come alive. You got to break higher, you got to break lower, you got to get crazy. Okay, but this is not it. All right. Hmm. Onward and upward. Okay. Um, yeah, you could do an intraday XSP if you wanted to. I think it's still kind of early. Like, by the way, I'm not convinced today of much of anything. The volatility futures have actually come higher in the first few minutes of the trade. Okay. Again, the volatility futures have come higher, but nominally so. The VIX, you can see the VIX actually got a bid under it early in early trade. There's not too many standouts this morning. As I said, Walmart's trading to the downside. There's still some rotations going on in here. Big movement, obviously, still in the metals. Okay, the metals, gold once again. Okay, I've reiterated this time and again. By the way, gold, forget it. It's going to break through 4,000. This thing could be 3,800 by like the end of the day. It could get that wild. Okay, I think gold is actually a lesson in uh, bubblenomics right here, because as this thing starts to pull back, people are in absolute denial. Like it's a better buying opportunity. It's the best buying opportunity. My argument in gold is a very, very simple one. Okay. Stop. If you're a gold bug, just stop for a second. Okay. It doesn't matter what you think about money. It doesn't matter what you think about the economy. Okay. It doesn't matter what you think about any of the politics. Gold, okay, the trade was being driven by the options marketplace, period. Okay. And it got involved in a gamma squeeze just like anything else. And that's okay. It traded like a meme stock. And again, that's okay. But you can't think of it as the classical sense of gold at that point. Okay. You got to think of it then as like a GameStop. Speaking of which, GameStop is actually one of the stocks on my list today, which is where'd it go, man? Okay. Because it's back. Okay. The whole like meme stocks are like coming back. But gold is one of them. It's it's an unusual, okay, area of trade. But when people see gold moving, the assumption is the world is basically coming to an end. But again, I think it just caught a gamma squeeze like everything else. I mean, look, I'm not, new. Like when I see gold exploding to the upside, there's definitely some reasoning beyond the idea of a gamma squeeze, meaning, okay, all back here, okay, I think a lot of this move is real. Somewhere right around this neighborhood here, maybe 3,800, it ignited in kind of a gamma squeeze. But the problem you've got now in gold, and it is a problem, okay, is that no one gives a damn that's in the trade. It's every man, woman, and child for themselves. And they're not sitting here like, I'm going to hold my gold for the rest of my life. It wouldn't make a difference. Market making reacts, okay, to trade, period. Okay. And if the trade turns negative in there, they are going to smash this like anything else. Okay. And if you are using up your brain power sitting here going like, but if the US dollar, no one gives two beeps about what you think about the US dollar anymore inside of the gold trade. As I said to you, gold, okay, is caught up in a squeeze. And looking at like its option statistics, okay, what do you got going on today? Nothing that definitive. Okay. You got some people like selling some calls. Nobody's buying puts yet. Okay. It's not even fierce if you would to the downside. The size is big though in here. I mean, this thing's already done 125,000 contracts, but there's nothing, wild and woolly yet going on in the options chain, but give it time. But again, everybody's fixated. This is like moth to the flame. Okay. And again, if do you buy the dip over here? No, because you've seen no real definitive bounce. All you've actually seen is a product that came down, flattened out with some volatility, now is actually threatening to break some of its recent lows. If you closed right now, this would be closing lows, right? Okay, but I think it's going to pierce right through and maybe even touch 4,000 today. Let's get the okay. Gold is in trouble right now, and again, think less about what the product is, okay, and more about look, follow trade, follow order flow. Stop following, economics and so forth. And you have to do that when a product is moving 2.5 or 3%, because at that point, okay, it's an emotional roller coaster for most people, and they're just not, people are not really tuned for that kind of price action. 2.5% inside of gold is big, and I say they're not tuned for price action like that. Okay, there's panic, there's rallies, there's more panic, there's more rallies. This is okay systematic of people getting out. This is what systematically destroys retail traders. Okay, retail traders are just constantly like, again, moth to the flame. It's moving a lot. All of a sudden it comes down, they buy the dip, it comes down even further. Okay, they may have to actually dig in deeper at that point, and before you know it, they're liquidating you, and that's how people get taken apart in trade. We've seen it also very recently inside of the crypto market. So the crypto market is lovely, okay, at being able to. Sorry, I'm looking at a couple of other products in here at the same time. The crypto market is lovely at being able to dissolve, plenty of accounts in here. And speaking of crypto, if you take a look at the Bitcoin futures, look at the bid under this thing. Okay, are you a buyer right now? Okay, Bitcoin actually ripping again above the 110. I keep talking about the 110 level because we're holding on to it like it was grim death. So it's got a solid bid under it today. Okay, not slipping too much. We'll see if it can actually hold it together. Do I think this is the beginning of the rally? Okay, I don't. In fact, on products like BITO, okay, this is what I would term a bounce and fade. Okay, it is a quintessential for BITO. It's a bounce and fade. You break the lower edge of an expected move. You shatter the lower edge of an expected move. Okay. You bounce upper edge, okay. Somewhere in this neighborhood in here is a decent short, I believe, inside of BITO. BITO, though, can be a hard product to trade because it's only a $19 product. The options in here, they're fair. Okay. I mean, it trades, but it's something that, look at this bid offer spread suck right now. They should get better throughout the course of the day. By the way, when I say the bid offer spreads suck, let me be very, very clear about that. The bid offer spreads, okay, in some of the strikes are all over the place. They're just all over the place. But the stuff that you can see what they want to trade and what they don't want to trade in here, they don't want to trade these half strikes. They don't want to trade them. So they make their markets really, really wide. This is like market making, gone amok. They'll make some of the strikes pretty good and some of the strikes kind of suck. But it'd be a rough trade to be able to get into, no question about it. But if I see opportunity in Bitcoin in the days to come, yeah, I'll take it. Okay, I will definitely take it. By the way, this has been one of the most quiet cash opens. We're threatening to actually break to highs right now. But ladies and gentlemen, take a look. There's no volume out there this morning, none. Okay, first few minutes trade, almost a half an hour has gone by. We've done about 100,000 contracts total. It's very, very quiet. All right. All right. As you're seeing the S&Ps rally, I just want to make a really quick point because I see this on my other screen. As you see the S&Ps rally this morning, the ticks are actually flipping over and going negative. So stronger S&P, weaker tick. Hold on, okay? Stronger S&P, weaker tick, weaker advanced decline line. What you have here today, okay, is a case of AI gone wild, and that's it. There's not much else. I mean, the financials, okay, for example, they haven't done anything, but they're on the lagging edge of this. They're only up 0.4%. The energy sector is effectively unchanged on the day, okay? As I said to you guys, maybe pay a little less attention to the advanced decline line, maybe pay a little less attention to the ticks, okay? And I'm the one who pulls up ticks initially in here, and I'm telling you, they're not going to do you okay, uh, they're only going to do you harm really today. They're not going to help you at all because this is a tech rally and that's it. I find it interesting that because of China trade truce, maybe, okay, there's a framework in place. Okay. By the way, did we determine how many times have we actually traded higher, okay, on China news? Let's start with this. Okay. How many times again have we traded higher on the exact same China news? Anybody? Okay. Did we come up with an exact number? Because FXI this morning is up. It's up about 1.3%. FXI, of course, is the Chinese large cap ETF. Chinese large cap ETF. Just want to pull up, if you guys will, 5 year on here. It is not. It is not at all-time highs. It's nowhere near all-time highs. It's not going back to all-time highs. If you look at a 15-year, okay, 54 was its all-time high, but it is, okay, coming back quite nicely. Good bid up here, okay. Um, yeah, by the way, the whole trade war thing with China, let's just count this year because people are exactly right. You can go back, okay? You can go back, almost a decade. We did the same dance, a decade ago. Nevertheless, okay, I honestly I can't count because the thing that's crazy is so we traded lower an initial discussion of trade war back in the April timeframe. Let's use the S&Ps for this. So we traded lower, okay, right back here. And then of course there's an announcement, that there's going to be, a stay of execution. I think it was like 90 days or something like that. Okay. That bounced us to here. This gap right there was a framework is in place with China. So for me, there's one news announcement here. There's another news announcement here. Okay. I think that there's another one right here. And then at minimum, there's one right here. To me, that's four. That's to me, it's four announcements on the exact same piece of news. There's a deal with China. I don't see the pullback when there wasn't a deal. Just throwing that out there. So if we just like every single day, you could come out and be like Groundhog's Day and be like, there's a deal with China. There is a deal with China. Okay. I like it. Yeah, I'm going to buy some soybeans, man. Soybeans is where it's at. That's what this most recent deal is about too. There's soybeans in the news. Anyway, onward and upward. It basically means we're not going to put another 100% tariff on. By the way, there's going to be another announcement later this week because Trump is going to meet with that entire group. Okay. And he's going to meet with, what do you call him? The head of a galactic empire. Where's like the cloak? Okay. He's going to meet with the head of the galactic empire this week. I think it's Thursday. Okay. I think it's Thursday, which we would know by Thursday morning, our time. Okay. But yes, they're going to meet with the head of the galactic empire out there. It's good stuff. It's good stuff. Anyway, S&Ps to new highs on Chinese news. Speaking of Chinese companies, okay, take a look at like Baidu and so forth. Okay. Now, mind you, Baidu, Baba, okay, big bids this morning. Baidu is up 5% on this news. Okay. Baba is up also 2%. Timeout. Both of those companies have recently mentioned that they're not even going to use US chips. They said, take your chips and suck it. Okay. They basically just said, no, we actually are creating and manufacturing our own chips, which is even more interesting because at that point, your reliance upon Nvidia in a US deal, okay, is far less certainty. Nevertheless, the stocks are still trading considerably higher. Surprised that Baba is not higher. And I am surprised that Baba's not higher because I think that this has more exposure to the US markets, okay, than does, for example, okay, Baidu. And the point that I'm trying to make with this one is a very simple one. It don't make sense, okay? And it doesn't have to make sense for the S&Ps to be up 60, okay? Because you know what? They're buying Apple. Speaking of Apple, it's been flat in the entire year. It's now up 9%, but it's up 9% literally. Like if you take a look at the number of trading sessions. So hold on a sec here. I'll show you right now, okay? It was This is Apple, okay? Effectively flat on the year. It was like literally flat on the year, okay? On the 16th of October, okay? And now you're 1, 2, 3, 4, 5, 6, 7 trading days later, it's up about 9%. Your entire year of gains, okay, is largely predicated on nine, trading sessions, and it's actually 7 sessions. It's 9 days in here. It's fairly wild. Amazon, okay. Amazon also has a fairly strong bid. Now, Amazon, okay, was down on the year. It's come back. It's positive now on the year. What's the reason I'm bringing up both Amazon and Apple is that people are continually talking about like tech and tech rally, except two of those tech titans have not really participated, but right now they are. And the reason I'm saying that is, okay, you're not seeing, okay, huge participation per se out of Nvidia. The last 2 days have been strong in Nvidia. There's no question about that. But the participation has not been coming, okay, from the mainstay. This is at the circle of life over here. Apparently, that's what that really means over here. This means you're infinite. It looks like infinity. You're infinitely screwed, huh? Okay, with Jensen right at the center of it, wearing his leather jacket. That's really what that symbol signifies: is you're infinitely screwed. Anyway, what has been at the epicenter, though, of some of the rally right now inside of the Nasdaq? It's not the usual suspects. Okay, the usual suspects today definitely have a bid. Okay, it's the unusual suspects. All of a sudden, we're buying crap. Okay, that nobody's wanted to touch all year. We're buying Apple. Okay, we're buying Amazon right now. Nobody's wanted to touch that. Microsoft, okay, has been strong throughout the course of the year, but Microsoft hasn't done anything since all the way back here in August. If you look at year-to-date percentage, Microsoft is up almost 30%, but it actually climbed and did all of that, okay, into the end of July. The first, 6, 7 months of the year were absolutely spectacular for Microsoft. It's done absolutely nothing since. Even it has a bid back under it. So again, buying crap and taking names out there. Meta, obviously, now up 25% on a year-to-date basis. Okay, I wouldn't say exactly coming alive, but Meta, okay, earnings are due out, of course, later in the week. Okay, Apple, same story. Earnings are due out, of course, later in the week. This is going to be an interesting week. Amazon, okay, even Bezos gets to talk this week, even though Bezos is kind of retired, but okay, still kind of evil and shows up once in a while. It's good stuff. Okay, let's talk about a few stocks I wanted to bring up in the expected move. Okay, the expected move has an extra one in there. The expected move this week is $110. Let's cruise to it. $110 expected move. Clear that out. You're more than about halfway home right now. So $110 expected move. You're more than halfway home right now to the upper edge of the expected move. Last week we closed on the upper edge of the expected move. This week, okay, it's anybody's guess right now. It's still early in the week. But again, you're more than halfway home to the upper edge of the expected move. Okay, I think everybody should know where those expected moves are, and you should know exactly what it is each and every week. It's $110.53. The expected move link, okay, meaning that this chart with my hand-drawn expected moves is pasted, okay, down below. If you're on Thinkorswim, you can definitely grab this, okay, and just import it instantly. You just come up here, okay, go into open shared item. It's a little bit weird, okay, because you have to hit Control V, you have to copy it and then hit Control V to paste in there. You go, why? Why? Because it's JavaScript, baby. There is no cut and paste. It's Java. You have to hit Control V to paste it in there, and you'll have the exact same chart. Okay. With that being said, in the SPX, we've already exceeded our daily expected move. And I keep reiterating this because we are $47 that you're supposed to move today. You're already up 65. So you're at like a standard deviation and a half. Okay. That's a pretty big beat right now for it, meaning that you're in rare territory. If you look at like a distribution curve, okay, let's actually do this a little bit more effectively. You look at the distribution curve. Oh man, clear that. I'm gonna redraw my curve. Ah, come on. Swing and a miss. I can't do it today. I can't. There's not enough caffeine. My distribution curve kind of has a flat melon. So its melon is flat. All right. In this distribution curve, what the hell? My pen won't even work right now. Come on, man. Nothing wants to work. Oh, seriously. My pen is mocking me today. It won't work. It won't work. It won't work. All right, that's gone. Anyway, in the distribution curve, okay, what we have here is one standard deviation. That standard deviation this morning, okay, is set at about 47 bucks. We're up here, okay, at about 67 bucks. Okay. Two standard deviations would be double this. It'd be almost $100, but you're kind of out there, okay, at like, 1.5 sigmas. Okay. So you're definitely out there. It is a bit of an outlier for trade. So risk reward today can definitely play in your favor if, okay, the market were to reverse. And of course, you look at the market right now, you go, there's absolutely no sign of a reversal, yada, yada, yada. People, that's okay that there's no sign of a reversal. Okay. It still could be worth a shot at some point. I think it's still early though, to take the shot, but I'll look for it. I'll look for it as the day actually progresses and I'll let you guys know. Okay. Um, I'll let you guys know if I do hop into that trade. Speaking of trades, okay, there's a few trades that I presently have on, and I'll come back to some stocks in a moment, but there's a few trades I have on. Frankly, I'm coming into this with this big rally right now. I don't have a lot on, okay? SMH, semis, okay? The semiconductors have kind of exploded to the upside, okay, in the last two trading sessions. It's not, the complete and total death blow because there's still $20 of movement in here, but I would need a fairly significant move. I mean, 30 strikes. I'd need a fairly significant move to play this one out. Okay. We're still right on the cusp, though, of what is expected in the SMH. There's just no question that you need some heavy sell side activity. We are still technically, okay, on the bubble inside of SMH. So that's the SMH trade. Okay. Next in the docket, Lennar. So Lennar, home builder here. Okay. Home builder pops to the upside again today. We're still well, okay, within the range here. We're a dollar, 70 out of the money, okay, on a long strike. But this trade's got all kinds of time. The last trade I have on is XLU. How is it performing today? XLU is basically flat on the day, and we're right on the dance floor here. So with $3 of expected move. Interesting that XLU is not really participating at all in this. And I say it's interesting because XLU lately has kind of been associated with some of the AI trade. Apparently that's no longer valid. Okay, I guess we'll see in the next couple of days. Nevertheless, if XLU continues to break down, this one would be profitable. The other two are going to need some work. Lennar, okay, is right on the dance floor. SMH is actually on the bubble right now, on the bubble of being outside expected move. And with 11 days left, it's going to come down to it. I'll be shopping trades, of course, throughout the course of the week. Today, though, is today actually going to give us any good opportunities? The only way that the good opportunities show up today is if we start to reverse at some point and we start to get some two-sided trade. And again, don't be afraid to take, XSP positions on your own because a couple of people are asking for it. So I'll pull it up here early on, but yeah, this one is pretty straightforward. You could just buy the 685s, okay? Spreading it, it's not the greatest thing ever. It's 58 cents. 58 cents, I could do that. Okay. Hope I didn't trip. There we go. So this one's fine. Trade like that, 58 cents to be able to make almost $5. Okay. And literally you can kind of set and forget it if you want to do that. By the way, I'm not, there's just a couple people asking for that in chat, and I don't mind trading it along with you. I personally think it's a little early for that trade. I do. I think it's a little early, but it's by no means wrong. Okay, to execute into that right now, because look, it's 58 cents. I don't care whether we're a minute now or whether a minute later. Okay, the most I can possibly make on it. You're looking for like reversion back down. The most I can make on that trade. Okay, it's $5 wide spread. The most I can make is $5. And some people don't like buying a put and then selling a put against it because the put you sold, you only collected like 13 cents. And I realize that. Okay. But I want to remain like vigilant in consistency. Okay. And right now seems like a much better time to use spreads than it does just to kind of wing it. Because I don't know anything in this marketplace, but I do know one thing. If I risk 58 cents, okay, I can make as much as $5, $4.50 of profitability. I only have to be right like once a week, like once a week. If we get a reversal once a week, okay, you're still smashing out of the park because you risk 50 cents, you risk 50 cents, you risk 50 cents, you risk 50 cents. You're like, you're already up to $2 and change plus commissions. And on the fifth day, okay, you make like $4. Okay, just shut up after that because you're still ahead. It's always going to be about number of occurrences. Okay. You make your trading about number of occurrences, you'll be just fine. Thinking that you actually know something, you're not going to survive. That's that's the way that you got to start looking at the business. Speaking of looking at the business, wow, look at Tesla. Okay, Tesla, they like me. They really, really like me. I own a model of every single Tesla. Okay, I really kind of do. Selling a Tesla if anybody would like one. Okay, I own one of all of them. Okay, I just I either really really like Elon owes me one or I have problems. Okay, I'm going with problems in there. Okay, but there's no Roadster. You can't even get a damn Road. I want the new Roadster. The new Roadster is very nice. Anyway, yeah, one of everything inside of Tesla. So if you're bullish in Tesla, you should pretty much just thank me at this point, because that's all me, baby. That's all me. And the number of Teslas that I've actually owned, I have. I think I've owned five or six Teslas. I don't even know. Okay. Um, yeah, my wife's car's gotta go. Okay. I'm not getting rid of the S plaid. I am getting rid of the X plaid. Yes. No, the S plaid is that one actually stays. That one stays. So it's time to I'm actually gonna go drive though the Cybertruck today up to Flagstaff this afternoon. Ooh, Cybertruck is going on the road. So okay, I'm dumpster diving in this Cybertruck. It's good stuff. S&Ps are up some 60 handles over here. Now, individual stocks that I wanted to discuss. Okay, back to it. We already talked about FXI. Look at GME. GME, okay. The reason I'm actually bringing this up, just representative of the market a little bit. Okay, some of the meme stock craze almost feels like it's back in here. So GameStop, some huge size trading through early on, 85,000 option contracts. Not enough to get it done though. The stock is actually reversing violently. Okay, violent reversal in here. Yes, I've seen Qualcomm because it's actually on my list over here. Okay, this is news related, so I don't think that there's any surprises in here. On news and more news, Qualcomm has been a dead animal for a long period of time, but don't worry, they have earnings coming out over here. Look at the contract size in there. Huh? A lot of call buying going on, obviously in Qualcomm. Um, uh, Don, if you ever had a long-term electrical outage, okay? Yeah, no, I have one gas-powered car. I have one petroleum-based car. Do you really think it's going to matter if there's like a long-term electrical outage and I'm in like a major city? Okay. Huh? Do you think that's really going to make a difference? I don't think, first of all, if there's a long-term power outage in a major city, okay, I don't think I'm staying here long enough. I'm going up to Flagstaff, okay, because there you can eat elk. You just like run down the street and like grab an elk. That crap actually works. So you could just grab and eat elk from the road up there. Okay, that and all the neighbors, they give you elk jerky. Most people see a herd of elk. They're like, ooh, a herd of elk. Okay. I see a bag of beef jerky at that point. And I know it's not beef. Okay. I know it's elk jerky, but it doesn't matter. Okay. It literally makes me hungry. It's a really weird thing to see a herd of elk and think, damn, I could eat one of those. I have that problem. It's a very, very strange one, but I like it. Okay. I'm all right with it. The other thing is, for those of you, if you do hunt, okay, you got to get a Tesla. You can roll up on that sucker. They can't even hear you. They could be in the middle of the road. Literally, the elk cannot hear a Tesla coming. It's the greatest thing. Okay. I don't even need to get out of my car to hunt. I could literally roll up on that sucker and be like, it's great. Okay. Oh, that's what I should do with the Cybertruck. Okay. Try to ram elk, ramming elk with it. It's good stuff. All right. So elk one, I want to eat them. Okay, so I was just making a point about there's some meme stocks in here. There's some reversion back. Okay, the next one over here. You want really ridiculous? Here's really ridiculous. Okay, Lululemon. Lululemon apparently signs a deal. Okay, with the National Football League to sell their products. Okay, my only question here is: are they going to sell like NFL stuff at their store, or are they going to sell like Lululemon goes NFL? I need to know the answer to that, and I couldn't find it, and I was like looking everywhere. Okay, because that's gonna blow my mind if a pair of yoga pants have like Green Bay Packers. Okay, your Green Bay packing on the back of that thing. Yeah, that's it's gonna happen, people. That's going to happen. Okay, Aaron Rodgers is not going to happen, but this is. uh, sorry. I'm cracking up about that. Did I offend anybody on the Aaron Rodgers thing? Okay, no one likes him, right? Are we all agreed upon that? Okay, I saw his like little Netflix special. I'm like, yeah, you just need to be locked up in an asylum at this point. They don't do that anymore. They should, and they should specifically have an asylum for former NFL athletes. It would be better that way. Um, it's yeah. So Lululemon actually just signed a deal with them. I enjoyed that piece of news. I really did. It took Lululemon to the upper edge of the expected move on the week. And the interesting thing about this, okay, Lululemon, it doesn't have earnings. Hold on, it doesn't have earnings. This one actually fits for an in-out spread. It's breaking down, okay, hits the upper edge of the expected move and shatters it last week. Upper edge of the expected move this week. Give it a little time. I'm not going to jump into this trade just yet, okay, but I'm definitely shopping it. So Lululemon is on the dance floor for kind of a bearish trade on the week because its pullback would be violent, right? All right, continuing on over here. We're still talking about okay, Aaron Rodgers, huh? Yeah. Did you anybody else see the Netflix special on him? I had to watch it. I'm not a fan, but I had to watch it. I'm like, what the hell could he possibly have to say on here? Okay. And after watching it, I got it. I just watched it at the gym or whatever, and I was really not very impressed. All right. Contract size actually seems to be picking up in the S&Ps. Okay. In this little bit of a down move over here. I'm going to reiterate something because I do have to turn it over. It's about 8 minutes from now to Jeff Bierman, but I'm going to reiterate something here. The contract size this morning has been absolutely, completely dead. It's picking up very, very nominally over here, but it's only picking up literally since there's some sell side activity. The feeling, at least from my seat here, okay, is that everybody's waiting for somebody else to do something. Okay, because there's not much engagement in the tape right now. There's just not much engagement. Even looking at stuff like Nvidia. Okay, Nvidia is actually seeing some pretty hostile sell side activity. It's why I'm bringing it up. But Nvidia, okay, there's no options volume in here. Okay, that didn't just percolate in like the last 10 minutes. It's really weird. Okay, there was no option volume in here. Okay, and it started just breaking out in the last couple of minutes. I'm watching this one on another screen, but take a look. The amount of calls being bought in here is staggeringly large versus calls sold. But the contract size really started picking up. I mean, it's done over 1 million contracts, and a lot of that though has like legitimately been the last like 20 minutes. In the last 20 minutes, this thing has traded a huge amount of contract size. So Nvidia is alive with option contracts flowing, and you can even see the volume in Nvidia, okay, is picking up. And the reason the stock volume, I'm mentioning stock volume equals hedging activity. As the stock's actually selling off, it's actually forcing market making firms to sell into it. This doesn't necessarily constitute that it's going to continue to reverse. By the way, I want to make something clear. I can see the order flow. It just got big. Okay. I can't tell you though if it like continues in this direction, right? Yes, there's a higher probability it continues in this direction, but maybe it capitulates and eventually bounces. But Nvidia, okay, is what the hell, man? Why did it move up there? You move back to where you came from. Don't you try to get out of your space. You belong between Tesla and Meta. Okay. Anyway, Nvidia is clearly driving some order flow back to the marketplace. So with Nvidia dropping, okay, be a little nervous inside of the S&Ps because what's actually holding those S&Ps together? Why is this doing this? You son of a baby monkey. Okay, it's really pissing me off. All right, onward in here, onward and upward. Okay. Uh, I'm not going to the In and Out in Flagstaff tonight, man. Okay, I actually have to go up there. I have dinner. I have dinner plans tonight. Okay, dinner plans in Flag tonight. So I'm actually excited about it too. I think it's burger night. It's burger night up there. Okay. I'm ditching the family. Ditching the family. Like I gotta spend like Halloween and stuff. Okay. Oh, Halloween actually this year is gonna be good. Okay. We're going to the good neighborhood this year. The kids are like all excited. Okay. It doesn't matter that they're 11, 13, and 15. They're all excited. They're like, we're going to the best neighborhood. Okay. This neighborhood, all right, they're giving out like good stuff, huge stuff. Okay. It's the neighborhood that everybody wants to go to but can't get into. Okay, baby. One of my son's friends lives in there, so we have a ticket into the nice area, and they hand out like the full size Hershey bar, which everybody always went to that house and tried to take everything they possibly could. Okay, it's good stuff. All right, all right. So sorry, I'm just reading over here. Okay, no In-N-Out Burger tonight. In-N-Out Burger, maybe at some point tomorrow. Everything just kind of mellowed out again for a few minutes. It's out of the S&Ps. Okay. Come on, market, breathe. Advanced decline line is basically a 50-50. And I'm taking it, I'm looking at the ticks now on the other screen. Ticks are kind of scattered and broken this morning. Okay. There's not, look, I don't mind saying this, there's not a great feel for trade today. Those actually that were mentioning the XSP trade. Okay. Well, I guess I should thank you because the trade is, it's doing something. Okay. It's slightly in the money right now. I'm just going to sit with it. Like, I don't feel the need to have to do anything to this trade. If I'm going to be profitable on here, see at 680. It's got to move down $5 and completely reverse the trading session. And I'm not sure that that's going to happen today. Okay. Your market today is based, okay, on a handful of tech stocks, which it has been. They're not fully pulling back in here, but there is a little bit of a pullback underway. Okay. Google has done nothing. Okay. It's up 2%. Meta has done nothing. It's not really pulling back. Nvidia, as I said, I can't see if it's going to capitulate or not. Okay. And Nvidia's got a little bit of a bounce under it. But the trade that's got hearts and minds right now, this is exactly what I was talking about. Gold just broke 4,000. Okay. I told you, and I'm not even joking, like gold can end up today like at 3,800, I wouldn't be the least bit surprised. Okay. It could drop another $200 today. I would not be the least bit surprised. And you're like, you're out of your mind. Okay. I'm not. I know what active trade looks like. I know what volatility looks like. I know what, a market that's cascading to the downside. This is the dynamics of a hedging. This is an algorithm just hedging it down. So the market making firms sell, reverberate back up, sell, reverberate. Okay. It's going to continue at this pace. You need to see ridiculous volume. Okay. In the futures contracts, which it is pretty ridiculous right now. But right now it's ridiculous for all the wrong reasons. The volume is ridiculous inside of the GC right now because we're hitting 4,000. mind you, and I want everybody to like hear this. Retail traders, like a moth to the flame, love to position themselves with stops and stuff right at big round numbers. If there's one thing you take out of this last hour of trade, don't do that crap. I don't care whether you're trading Microsoft, Apple, Nvidia, do not dare put your stop order, okay, or base any type of risk management around round numbers. It has been a long time since I've actually said that. It's something that, you know, when I worked at Thinkorswim and TD Ameritrade, we would always look at like where stops in the book were. By the way, yes, okay, at Thinkorswim and TD Ameritrade, I could personally see where your stops were. It wasn't like, we could look at all the order flow in Apple. I could look at all the order flow, meaning like all the orders, what they call order not held. I could look at all the order flows here and all the order flow there. Okay. And that's fine. And whatever. But there's one thing that you used to see all the time. Okay. And that is people putting in, okay, stop orders or stop limits or, contingency based orders at round numbers. Stop doing that crap. Okay, don't do it in the S&Ps. Don't do it on an intraday basis. But this is congestion in and around. Okay, a major level, and that is it is a very very bad thing. As I said this morning when I came on. Okay, you're going to test. You're going to test the 4,000. Well, we tested the 4,000. Okay, it's on a little bit of a bounce. Don't be surprised. This is people that it triggered some stops. Okay, broke for a momentary. It's going to rebound a little bit. It's going to get crazy and retest it. Jeff Pearman, you're green, man. You're green.
I'm
Okay,
green. Oh
you're green.
goodness.
Yeah, you're green. So you didn't realize you were green. Okay, it's not
No,
easy green.
oh
So
man, I can't
gold's
adjust
off
it
by
to it.
3%. Gold's off by 3% right now. S&Ps, okay. S&Ps, like say what you will, they're basically sitting at highs of the session. All right, your stones they're off some of the highs of the session, neither here nor there. But the S&Ps, they're being held together right now by basically three stocks. Okay, you've got Tesla in here. Okay, Nvidia isn't really necessarily even holding this together. You got Meta. Okay, uh, maybe. Okay, maybe a little bit of Nvidia, but this is again, it's a fairly sketchy kind of rally in here where you would think, okay, that this thing would pull back to some degree, but no, it's constant rotation into the same AI stocks. Again, a lot of risk as this day actually wears on. Nevertheless, we are still halfway home to the upper edge of the expected move, and continue, okay, to be rather strong on a relative basis. Okay, other sectors though, last thing we want to look at, XLU coming off much stronger now. So XLU actually has you're saying there's a chance. XLU even has a chance today of seeing degrees of, decent profitability. We're not taking this thing off unless it's up like 55%, so don't even consider it. The other sectors coming down, XHB, the home builders. I've just noticed in the last couple of moments, the home builders, okay, specifically like Lennar. Come on. Oh, this thing's gonna drive me crazy. Anyway, Lennar, okay, just basically mellowed. This is one that I don't feel like you're going to have to watch a lot. When it comes down, you'll know it. This is going to be a fast and furious trade. But yeah, the sector that's hot, AI. The sector that's not, well, basically everything else, just kind of sitting there floating around. Jeff, what do you got today?
Something completely different, off the rails. I haven't done something like this in years. It's a fundamental category. It's about trying to make sense of Wall Street's fuzzy math and how they come about, like things that make no sense whatsoever. So it's opportunistic to buy or sell.
Yeah, fuzzy math. By the way, I'll tell a 2 second story. You'll
Go for it.
appreciate this. So, well, specifically, I'll tell you this story because nobody's heard this, but Blake may or may not have mentioned this. Blake wrote a story the other day. It sends it out like 2 weeks ago about being, okay, bearish on a particular sector. They're not making any money. Okay, he actually went after a couple of individual stocks in there. A uh, a buy side analyst wrote him and he goes, "Your whole thesis is completely off," and asked us to remove it from our website. Uh,
Oh,
can you believe this? So the
what?
yeah, no, but it was all based on like fundamentals. His fundamentals were so messed up. They're basically right now. the Wall Street has gotten to the point, if you talk negatively about AI stocks right now, they're trying to pressure, okay, firms, including ours, to remove content because we were bearish in a particular area. It was not me, it was actually Blake. People can definitely bring that up if they would like, but literally, Blake was being pressured to remove something that said negative about AI. That is it's the world we're living in. By the way, it reminds me of like during the financial crisis when like S&P is like, they're good. That tranche of mortgages is good. All right, I got to turn it over to
Is
you.
that a
Have at
form
it.
of cancel culture, Don?
No, but it's the world you're living in right now. It's getting so crazy out there that they're literally, okay, they don't want you to say anything negative about AI. It's just,
God.
keep the music on, keep the music going. Everybody will find a seat until we don't. Don't say anything negative about it. But everybody is passing around the circle of life, thing that Bloomberg put together with Nvidia in the middle. Everybody's been passing it around now for 2.5 weeks when it first came out. Everybody sees it, yet even banks are coming out, central banks are coming out now warning, okay, that AI could be a massive collapse specifically related to Oracle. And Jeff, if you will, pull up Oracle stock right now. Okay, do you see a massive collapse related to Oracle in here? Because I sure as hell don't. Anyway,
Nah, I can't go to that extreme. Sorry. No. That's a
well,
beautiful chart. No.
no, seriously, that's the amount of debt they're taking on is
But
it's
Don, I can tell
absolutely,
you
yeah,
this. The money
yeah.
flow on Oracle is all distribution, like all the institutions bailed on this stock. So it's just basically up on options trading. That's it.
Well, it's going to be interesting. The amount of debt they're actually
Yeah.
taking on right now
Interesting.
is a category that has never been seen before. All right, Jeff Bierman, right now.
All right. So let me lay the game plan down because I'm going